Well, yo, what's going on, guys? Can you guys hear me? Just drop a one in the chat. Turn off mute. Can you guys hear me? Let me know. Make sure my headphones working. Can you guys hear me?
Yeah, can hear you, bro.
Nice. Good morning, everybody. Gonna get started here. 5 minutes, right at 11 a.m. We'll get started. Gonna be going over top-down analysis. Like I've been getting a lot of questions throughout these last 2 weeks about how I read my higher time frames, how I use higher time frames to frame our week. And we're kind of going to be doing that on this call. We'll do a little bit of weekly analysis also. So I'm going to give you guys my analysis going inside of next week. We're going to be going over the trades I took this week. So we'll start off by doing that. And we'll be going over it, and you guys are going to see how I use the higher time frames, my higher time frame POIs to, form these A plus bullish and bearish one shot, one kill setups. Now, if you are new, see some names in here I haven't seen before. If you are new, make sure you watch my YouTube videos. Those you can get a better grasp of how I trade. The way that I trade is very simple. Premium discount. I'm a big firm in premium discount. For the ones that know me, you guys know I'm a big advocate for premium discount, liquidity runs, displacement, MS shifts, real simple stuff. So, like I said, guys, I'm gonna give people 4 more minutes. So right at 11 a.m. I'm gonna get started. This call should be recorded. Yeah, it is recorded. I will post this video on YouTube. So for the ones that can't stay in here the whole time, you will have this video on YouTube to your pleasure. So about 3 more minutes, guys. We'll get started. Get this link out and we're gonna get right into it. This call probably won't last that long, probably like a nice hour, and that's it. There's no need to hold you guys up too long. So we'll get started here in about 3 minutes. Consequences of greedy capitalism. And also too, for the ones that do have questions, I'm gonna try to answer all the questions at the end. So just allow me to get through the presentation, and we'll take about 30 minutes to answer all questions, trading related, psychology related, anything that I can help you guys with. Just try to hold questions off to the end. Let me just get through.
What's up, man?
Let me get through everything. All right, 2 minutes, 2 minutes, 2 minutes. I'm going to start sharing my screen here. We're just go ahead and dive right into it, honestly and truthfully. So let's go ahead and dive into it, guys. Go ahead and get started. I don't really like to wait around too long. So, like I say, guys, for this call, the main topic for this call, we're going to be going over. Okay, 1 second. You say you don't have a Zoom account. Say he don't have a Zoom. I don't know how he don't have a Zoom account. But like I was saying, guys, the number one thing we're going to be going over is going to be going over top-down analysis. We're going to be doing how to identify higher time frame order flow plus trends, how to use POIs for high probability setups, and we're going to end off just pretty much refreshing the one shot, one kill method. So first and foremost, guys, higher time frame, right? I know you guys probably see a lot of, videos on higher time frame and which POI to use, which fabric you got to use, which order about to use. In this video or this live session, I'm going to be talking about the way that I incorporate a higher time frame, the way that I use the higher time frame on the weekends to get my bias going into the new week. So first thing first, guys, I start on the monthly time frame, right? So I do use the monthly time frame to get a clear picture of what this market is trying to draw to. Now, let me go ahead and make my screens a little bit bigger here. So, with that being said, Ron starts off by using the monthly time frame. Why does Ron use the monthly time frame? The reason I use the monthly time frame because the monthly time frame is going to literally show you where the clear draw on liquidities is. Now, if you can't find a clear draw on liquidity, that means old high, old low, relative equal lows, relative equal highs. If you can't find anything that's, standing out to you on the monthly time frame, then you want to go to your weekly, daily, 8 hour, 4 hour, and 1 hour. So that's the way that I do my analysis. But for me personally, guys, I start on the monthly time frame. So right here we have Euro GBP. This is a live. Let me make sure this is live, not replay. 1 second. All right, yeah. So this is actually current live price action. Now, for the ones that's in my Telegram chat and the ones that's been following me, you already know. A lot of you guys already know what we have been expecting on Euro GBP. You guys just go to my Telegram chat where I post all my live executions, live trades, live analysis beforehand. You guys have already been seeing that I have been bullish on Euro GBP. Now, I'm going to give you guys a reason why I'm bullish. I'm going to show you guys how I took this trade on Monday with a real account, real money, real withdrawals, not demo. So let's go ahead and start there. So first and foremost, guys, Euro GBP. I'm gonna give you guys the real reason why I was long, what I seen, and how I came up with my higher time frame bias. So first and foremost, guys, the monthly time frame was not really sticking out to me. So I came down to my weekly time frame. So I'm gonna slow down again. You just seen that the monthly time frame, I couldn't really come up with a direction on the monthly time frame. So therefore, I dropped down. That's why I call top-down analysis. I dropped down where to my weekly time frame. So I started on the monthly. I couldn't find nothing on the monthly. Okay, now I'm coming to my weekly. On the weekly time frame, the first thing that I see, let me go ahead and clear up my charts right here. The first thing that I seen on the weekly time frame is that we have a bullish, and I'm gonna make this green. So the green rectangle box is gonna be bullish for value gaps. The red one is gonna be bearish. Real simple. As you can see right here, we had a nice weekly bullish fair value gap that's been respected. We also have another one sitting here. So when with me seeing this right here, I'm automatically going to go ahead and start, hunting long positions. So we have two bullish fair value gaps that I'm looking to, see if we can get higher prices. Now, let's go over my draw on liquidity. So where is the market going to go? Yes, we're bullish. Yes, the market is inside of our higher time frame POI, but where is it going? Dropping down to my daily time frame, now that I got my two POI, so these two rectangle boxes, guys, this is simple. These are just my POI zones where I am interested in going long. Now, personally, me personally, my draw on liquidity is going to be these highs right here, these equal highs resting right here. I would love to see if Euro GBP can reach up to these highs, center around. This is around that 420 level on Euro GBP. So once again, I am bullish on Euro GBP. I started from the monthly time frame. I couldn't find no POI in the monthly. I came down to my weekly time frame. I've seen two POIs. I got a weekly fair value gap and I got another bullish weekly fair value gap lining up with each other. So with that being said, I came into this week once again. This trade was taken on a real account, not phase one, not phase two, not some demo money. It's taken on a real account, real money. Go check the Telegram chat while I post my web chart earlier on this week. I came into this week already bullish. So I want to slow down here and just tell you guys the importance of having that higher time frame bias. When I came inside of Monday, I already knew what I should have been doing on Euro GBP. I wasn't waiting around for nothing. I wasn't waiting for a breakout. I wasn't waiting for some indicator to flash. I knew exactly what I was looking for on Monday morning. Longs. Why? Because I did my higher time frame analysis. I understood and we're currently still in the same zone. So we are currently still in a zone where we can look for high quality long positions on Euro GBP. Now, I get a lot of questions like this. Where, Ron? What if the loan didn't show? What if I had my high time frame POIs and I didn't get a loan opportunity? You just didn't get a loan opportunity. You move on to the next pair. What does this do? This keeps you out of stupid trades. I'm pretty sure a lot of us in here have took dumbass trades where we're just hopping in trades just because we're bored, hopping in trades because we, just making up any reason. If my model didn't show, I would have not entered the trade. So with that being said, Euro GBP right here. Once again, we had two weekly fair value gaps. So with that being said, we're going to be looking to go long. So let's go ahead and like I said, I am going to be using the replay tool here. 1 second, I'll check the chat for any questions. But like I say, guys, just if you can, try to hold the question to the end. But if it's like a urgent question that you really want to ask, obviously just come off mute and ask me, but just try to hold the question to the end. I promise you I'm gonna answer all questions. Any examples you guys want me to go through, I'm gonna answer all that. So right here, guys, this trade was taken on Monday. Monday, right here. Real account, check Telegram chat, real account, not paper. So coming into Monday, I just did my weekly analysis. So you just seen me go through and do my weekly analysis. Let's go ahead. So we're gonna start over one more time. Starting on the weekly time frame chart, we're gonna zoom out and we're gonna get a lay of the land here. So zooming out here, and we're gonna zoom in and see where are we at in in the weekly time frame area. So first thing I seen right here, guys, on weekly time frame, we had an MS shift right here. So we had an MS shift on a higher time frame. So we got a market shift here. Before we had that MS shift, what also did we have? We had stop runs. So liquidity was grabbed on the downside. So we did take out liquidity. So we had liquidity grab. We had an MS shift right here. MS shift. As soon as we take out this immediate term high, it's going to be an MS shift. After price takes out the MS shift, we simply wait for price to retrace back where inside of our bullish POIs. Where, Ron? Where's your bullish POI then? We have a bullish fair value gap here. Do we got any questions? Do we have any questions, you guys, on why this is a bullish fair value gap? The second one we had was here. So at this point, I am already anticipating. This is why I say I don't react, guys. I'm anticipating. I'm not reacting. I'm anticipating. So my whole mindset is that I'm trying to anticipate and call these moves before they happen. If you go on Instagram and Twitter, you listen to all these other goobers, they're waiting on stuff to flash, indicators, RSI, Bollinger Bands. I'm not waiting on none of that stuff. I'm waiting on real price action. I'm telling you, this market is going to go bullish. And I'm coming into it with that confidence, and I'm going to be waiting for a one shot, one kill scenario to back that up. So first and foremost, like I say, guys, before we drop that downside of entry drill, notice he already knows what he wants to see. He already know that we had an MS shift on the weekly time frame chart. He already know we had a liquidity grab on the weekly time frame chart. He already know that we got two bullish fair value gaps lined up with each other. He already know this. So when I drop down to my 15-minute time frame, it's easy peasy. I'm not guessing nothing. I know exactly what I'm waiting for. So let's go there. 15-minute time frame. The 15-minute time frame for the new people in here, we do execute on the 15-minute time frame. Our analysis and our higher time frame charts, all that stuff is done on the 1 hour and up. But when it comes to pressing the button, we're going to be entering the 15-minute time frame. So with that being said, I'm going to go ahead and pull up my session tool. Only thing this is going to be showing you London session and New York session. So with that being said, this is Friday. We're not going to fast forward. So this is Friday right here. Now we have Monday. So now it's Monday. So before I even fast forward, when I wake up on Monday morning, I already know where the market should be going. What if the market doesn't give you that run? What if on Monday the market shows a bearish one shot, one kill? Then I'm not going to do nothing. I'm gonna ignore that. I'm not gonna take that sale just because it's there. I'm gonna ignore that sale and go find another trade, another pair, or just simply wait for your GP to give me what I look for throughout the week. Now, granted, this trade showed on Monday, which is very, very, very nice. So let's go ahead and go over the rules. So obviously, hold on, somebody join the screen. Please don't draw on the screen. Like I said, if you got a question, guys, just come off mute and ask, but don't draw on the screen, please. So with that being said, this blue box, guys, this is going to be Asian session. So for the new guys in here, my motto is simple. Asian low, Asian high, London displacement, OTE retracement. That is it. So in this example right here, I want to go long. So Ron is looking to take a long position. So what's the first thing that Ron needs to see? He needs to see Asian low purge. Now I'm gonna go ahead and put my rules on the screen here so you guys can follow along with me. A plus model rules here. I'm gonna make it a little bit more bigger. All right. So first and foremost, guys, like I say, what's the first rule? Wait for liquidity to be rated, Asian low or Asian high. Since I'm going long, I'm going to buy. That means what? I need to see Asian low purge. Now, let's go over the time frame for Asian section. I know a lot of people use different ones. I'm gonna tell you time frame that I use. I use 20O. up to 23.45. So once again, I use 20O to 23.45. I know some guys have to use 19O. Like I say, listen, whatever floats your boat, whatever you want to use, do that. I use 20O to 23.45. So with that being said, I'm gonna go ahead and take out I'm gonna delete midnight open. All right, so like I say, guys, with that being said, we had age and low purge. So age and low right here, it was purge. Took out age and low. What time, Ron? Ron, what time did we take out age and low? We took out age and low during what? London session. Ron, are you trading London session? Are you up at, watching London session? No. I'm not up at 2 a.m. in the morning. I'm not up at 1 a.m. No. I'm coming to my charts at 5 a.m. So with my model, when I come to my charts, I'm already gonna know if it's there or not. So one, that's why I say I'm not waiting on nothing. I'm not reacting to anything. When I showed up on Monday, my model was already printed. Asian lowest purge, yes. Now let's go over the next rule. Clear London displacement. What time does London session start? London session starts at 2 a.m. and it ends at 5 a.m. Do we see displacement right here? Yes. Do I have any questions, guys, about this displacement? This is clear London displacement. If you said it's not clear London displacement, probably need to do a little bit more studying. This is clear London displacement. It's very, very, very clear that this market is trying to go up. It's very clear. What's the next rule? New York session, OT retracement. Draw my fib from the body. Draw my fib from the body. Now I'm gonna stop right there because I already know there's gonna be questions on, okay, Ron, why did you draw your fib from the body? Why did you not draw your fib from the wick right here? For the ones that's been studying with me and that I teach personally, you guys should already know this answer easily. If we have strong displacement, we're going to be using the body. If we have weak displacement, that the displacement is not really that strong, but it's still there. That's when you use wick to wick. And I'll go over some examples on that on this call. So with that being said, only thing that we're doing now, guys, is we're simply waiting for price to come down to the OTE. 62, 70.50, and the 79 level. That's all that we're doing. So I'm gonna go ahead and fast forward here and we're gonna go over this trade together. As you can see, I got filled at what time? 9 a.m. So my entry got hit at 9 a.m. So before I even fast forward, let's slow down. Let's slow down. Let's backtrack. Where do we start off at? We start on the weekly time frame. So on the weekend, so on Saturday and Sunday, instead of bullshitting around watching sports and doing other stuff, I'm already on these charts understanding where the market should be going on Monday. I started on the weekly time frame and I understood that we had a what? We had a weekly MA shift, we had a weekly liquidity run, and we had two weekly POIs that we're currently sending in right now. I dropped down to my 15-minute time frame and I seen that my 15-minute time frame gave me my signal. Price took out age and low, check. Clear line displacement, check. Do we have a New York session OT retracement? Yes, that's checked off. What's the fourth rule? Target 2R or 3R. Entering here. Where did your stop loss go, Ron? Where did your stop go with OTE? The stop loss always goes at the 100 level. I'm sorry, at the one level of the OTE. So whether you draw your field from the wick or the body, your stop loss always goes at the one level. We're going to be dragging our two to 2R. So let's see what happens. 2R hit right here. 2R hit. Let's see the 3R get hit. 3R was almost pierced. Let's see did it get hit. Let's see. Before going to break even. 3R was hit also off the retracement back down. But to keep things simple and transparent, as I always talk about, guys, I closed this trade on that 2R. I didn't hold for a 3R. I didn't hold this trade all day. I held for a simple, easy peasy 2R because that's all that you need. So once again, this trade was taken on a real account. This trade was taken from a weekly bias. I had a weekly higher time frame bias. So to start off the call, as I say, guys, I want to go over how to do top-down analysis. I just showed you how I did my top-down analysis. You seen me. I started from the monthly and I didn't say nothing about the monthly. Why? Because it was nothing clear. I wasn't going to sit here and make up something. It was nothing on the monthly time frame that was clear to me. So I came where? To my weekly. The weekly stood out to me. Liquidity run. Let's go back to it. Let's go back to it right here. Let's clear the chart up right quick. Let's go back to it. Weekly time frame. Euro GBP. Liquidity run. MAS shift plus displacement. MAS shift. Price came back where? First bullish fair value gap. Second bullish fair value gap. So we had two bullish fair value gaps lining up with each other. I am extremely long. That's the reason why Euro GBP was taken. So I want to start right there. Do we got any questions on this, right, guys? Any questions on this trade? Euro GBP? Any questions?
So I got a question, bro.
Uh-huh.
So, you started on the monthly,
Yep.
and then
Started
you
on the
did.
monthly. Yep.
All right, cool, cool, cool,
So
cool.
I started on the monthly
And
time frame. Now, the monthly time frame, it was not like I say, the only thing that I see on the monthly time frame, we had this very small left fair value gap right here that price reacted off of. Now I could have used this, but like I say, it wasn't really sticking out to me the best. So I start on my monthly. So I'm gonna write it down here. I think I already got it written down right here. Example. Yeah, right here. Top down analysis. So I start from monthly, weekly, daily. Now, obviously, as you just seen, I didn't have anything to do on the monthly time frame. I didn't have any, supporting factors on the monthly time frame. So that's when I came to my weekly. Coming down to my weekly time frame, that's when things got real spicy. So now it's the first thing that I see on my weekly time frame chart. So I see that price has what? Prices ran down inside of that monthly fair value gap I just drew out, the rectangle box here. This is the first one right here. It came down and hit that. Look at this right here. And this is what's key, guys. This is the reason why I'm long. Look at this strong displacement. See how energetic it is? That's clearly telling you something. So we had strong displacement on the weekly time frame, indicating that price is trying to go long. Now we need more supporting factors just in displacement. We need to see MS shift. Well, the MS shift right here. This is an immediate term high. We have no, if we're bearish, we have no business taking this out. No business. Price should be supporting all down closed candles if we are bearish. Is that the case right here? No, price had a explosive run through medium term high, closed above. Now price simply retraced back down. So this is for the ones that watch my Instagram. When I talk about retail, this is what I'm referring to right here. Now, retail is going to see these couple down closed candles right here. Oh, it's bearish. It's a downtrend. It's going down. But we understand the big picture. We understand that. Wait. Price just still got liquidity. They had a strong displacement. Plus in Mesha, these couple down close counts here, the only thing this was a simple retracement. So I'm not saying, oh, it's bearish. No. Until proven otherwise, I'm bullish on your GBP. Now, if I'm wrong, that's fine. But until proven otherwise, I am bullish on your GBP. So that's how I do my top-down analysis. Now we're going to go inside of another example right here. This trade right here that I didn't take this trade. It was a copper trade. This trade was it was supposed to be taken on Friday. But for some reason my broker, my funded futures, it didn't let me enter for some reason. It didn't. It said I had to buy some type of real market data, which I don't know what that is. But let's go over that real quick. We're gonna do the same exact thing. So we're gonna do the same exact thing I just did on your GBP. So let's start it. I'm gonna go ahead and start here. I'm gonna delete everything off my chart. I'm gonna take everything off my chart. So make charts clear. All right. So now we're gonna do our top-down analysis. I'm gonna be going how to use higher time frame POIs to frame a one shot, one kill. So let's start from monthly time frame. Let's zoom out. Let's zoom out. Let's zoom out on the monthly time frame. So obviously, as you can see, we are in a premium market, right? The market has just been taken out. The market has only been taken out buy side. So we had this old high here swept. So we had an old high swept here, old high swept. We had another old high swept here, right here. It got swept. We had another one that got swept here, old high. And the last one that got swept was going to be right here, another old high. So with that being said, just this, like I said, this is just simple market structure 2.0. The only thing that's being taken is what? Buy side. Now, retail, the book guys, they're gonna say, oh, it's gonna keep going up. It's an uptrend, it's going up. They're gonna start putting that trend lines right here. Trend line, right? That's what the books say. Buy trend lines. Listen, guys, I don't do that. What I'm seeing right now on copper, we're only offering buy side liquidity. I've been trading for 6 years, guys. I'm telling you right now, once the market starts to do this, it's literally setting up to go lower. It's fooling trend line people, indicator guys, bat patterns, and all this other, bullish flags. It's fooling these guys to continue to keep going along and chasing it. The way that I teach my students is I'm teaching you to think opposite of how the masses are thinking. Because everyone right here, they're saying the exact same thing. Up, uptrends, bullish divergence, bullish RSI. That's what they're saying. So on a monthly time frame on copper, we have been taking out old highs. So when I drop down to my weekly time frame, I want to find some supporting ideas to line up to go bearish. So let's do it. Now I'm on my weekly time frame chart. I'm on my weekly chart. What do I see on the weekly time frame chart? So the first thing that I see right here that pops out to me is this. What's this right here, guys? What's this right here? This is a what? A bullish fair value gap, right? Do we got any questions about this? This is a bullish fair value gap right here, correct? Why did price close through that? So when price closes through this bullish fair value gap, what is it going to turn into? An inversion fair value gap. So I'm gonna make this red. Now, I don't know if you guys know about inverse fair value gap, but like I say, I'm a big advocate of it. It's very, very, very easy to spot and see. The only thing that a inversion fair value gap is simply if you're looking at a bullish fair value gap and it gets closed through, once price returns back to this, it's going to be an inversion fair value gap to go short. So let me slow down. I probably said that too quick. I'm probably moving a little bit too fast. Let me slow down. We just came from our monthly time frame, right? And we seen on the monthly time frame, what did we see on the monthly time frame? We seen that price was only offering buy side. Price was taking out buy side, old highs, old highs. No old lows were taken on the monthly time frame chart. And it's been doing that for the last couple months. Now, as smart money traders, we're not gonna say, oh, it's just going on up, going on up. We're gonna keep on buying, even though it's above old highs, we're gonna keep on buying because the trend lines told us to. It's just that's not how we do things. We're gonna say, okay, price has only been offering buy side. We've been continuously taking out, buy side liquidity, old highs, old previous week highs, old previous month highs. We are anticipating, guys, we are anticipating a bearish one shot, one kill. We are anticipating a retracement to the downside. They go take out what? Sell side. So with that being said, here we are on copper. Of this week right here of Monday, this was Monday, March 31st. Price had a very strong displacement. And we created inversion fair value gap. Price has now retraced back. Let me go here and remove this counter right here. So this is Sunday. So on Sunday or Saturday, this is the first thing that we're seeing on copper. So on the weekend, in other words, on the weekend, this is what we're seeing on copper. We're going to be anticipating price to simply push up inside of here. Let me change that. 1 second. We're going to be anticipating price to come back inside this bearish inversion fair value gap. And we're going to be looking for a bearish one shot, one kill to go short. Why? Let's go over the reason why. So before we even drop down, we need to go over the reason why should price do that? Why should price respect this inversion fair value gap? Why should price just not rally through it? Well, on the monthly time frame chart, we're in the premium. That means that a premium market simply means that the market is only offering buy side. It's simple as that, guys. A discount market simply means that the market is only offering sell side. That means that the market is just continually pushing lower and it's fooling retail to chase it. Just like here in the month. So let's go back right here. Monthly time frame chart. Just using pure common sense, guys. Where's the market trying to go? Up. It looks like the market is just going up. It's just going up. Sell side is not being offered in this market. I'm telling you now, guys, as I just said, it's not going to do this forever. It's not. So it's best if you put yourself in that position to look to go to counter these trades. That's why I am a contrarian when it comes to trading, right? I'm always going against what most people see. If you watch my Instagram, you always hear me talk about retail. I am a retail trader. We are retail traders, but I don't think the same as retail trader. I don't see shit and say, oh, it's going up. No, 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 no. I need to find real reasons why something is going up. If the market is only offering buy side, I'm not going to buy because I know from experience that that market is going to have retracement to the downside. And anyone that's chasing any of these swing traders, so right here, we got swing traders. This is a monthly chart. Swing traders have been buying and they're profitable. I want to go fade them soon. I want to see the market absolutely go take out all this sales stops right here. I'm gonna zoom in a little bit more for you guys to see. This is money, guys. I don't look at this and say, oh, it's a trend line. It's respecting the trend line. No, this is money. This is in the future, in the near future, this is money. We want to see that. We want to see market go get that. We're not gonna say, oh, it's gonna keep. No, no, no. We're gonna go get that. So with that being said, guys, obviously, as you can see, I'm already bearish. Obviously, as you can see, I already know exactly where I want to go, take my trade that's short. Now let's go over the next scenario. Well, Ron, you did all this analysis and you know you want to go short, but what if a long position shows? What if the market doesn't go short, Ron? What do you do then? Go to another pair. I'm not chasing. I'm not chasing. I'm not entering the trade just because. I'm gonna wait or I'm gonna go to another pair. So with that being said, let's go ahead and drop down now to the weekly time frame chart, guys. This trade did form on Friday. It did take it took this trade all week to form. So Monday it didn't form, Tuesday it didn't form, Wednesday it didn't form, Thursday it didn't form, Friday ended up giving you a good trade. Now, if you can wait that long, you would have got rewarded. If you couldn't, you know, whatever, it's whatever. That's why you need patience in this industry. So we're gonna go ahead and fast forward here all the way into Friday. So we're gonna go ahead and go through Monday's price action. We're gonna wait on Friday because that's when the model formed. All right. So notice, so right here, guys, this rectangle box. This rectangle box, what is that? That's that weekly inversion fair value gap. So let's wait for price to get inside of there. Notice on Monday, price got real close to it, and price actually gave you a model on Monday. But we're gonna wait and follow the rules and wait for price to get inside of our POI. So what I'm doing right now is I'm waiting for price to come where inside of my POI. What's your POI run? The weekly bearish. Okay, we're in here. It's Thursday. Okay, so let's stop right here. Let's stop. So on Thursday, price did what? Price came inside of our what? POI. So what do you think we're going to be doing on Friday? Just use common sense now. We want to go short because price has now reached our POI. So for the ones, and this is why I make this call, for the ones that always ask me, hey, Ron, how do you use POIs? I'm showing you right here. I'm waiting. So I had to wait, what, 4 days until price came inside of my POI? Now ask yourself this question. Do you have the patience to do that? Do you have the patience to wait all week for one good setup? Be honest now. Be honest. Because you can lie to me, but one thing you can't do is lie to yourself, and you can't lie to your P&L history because that's going to tell you everything you need to know. So now that it's Friday, we're not going to wait for price to come back, show us our model. Okay, what do we got? Since we're looking for a short position, what's the first thing we need to see? Someone let me know right now. Come off mute, whatever. Type in the chat. If I'm looking to go short, what's the first thing I need to see? Someone walk me through this trade. Anybody, just come off mute. If Ron is looking
So
to
you
go
need to
short,
see you need to see a sweep of HI.
all right.
Then
So
you
we
need to
got
see
Asian high right here. Good.
Then
What's
obviously a
next?
market structure shift and a
All
London
right.
displacement.
Okay, so let's identify the MS shift. Someone use the tool in the chat and draw out the MS shift. Wherever you think it is, it says no right or wrong. That's why we're here to learn. Someone mark out the MS shift. Good sound song. Okay, that's good. Anyone else want to go for it? Because he actually got it right. So we can just keep going. So that's good right there. MS shift right here. Let's go over the MS shift. Let's zoom in and go over the MS shift right quick. So we had an imbalance here. Imbalance. It got rebalanced. Price moved away. So if the price moves away, why in the hell are we coming back down closing below this? I'm gonna go one more time. One more time. Let's slow it down. We had an imbalance. It got rebalanced. Where did it get rebalanced, Ron? Right here. Now, if we're bullish and it's gonna continue to keep going up, why do we do this right here? Why do we go down and close at 315? Why do we do that? Because we're not big, because we're not bullish. That's an immense shift. Imbalance, they got rebalanced. Price moved away. Price came back down, closed below. That's a market structure shift. Simple as that. A lot of these guys talking about change state and delivery. Listen, guys, it's all the same thing. MS shift, change state and delivery, breaker structure. It's the exact same thing. These guys are making up stuff to make it seem like it's something special. It's the exact same thing. It's an MS shift. All right. Good. Yep. I see you. All right. So someone let me know now. What's the next step? So we just had our Asian high purge, London displacement, MS shift. What's the next step? Someone let me know.
Now we do a retracement,
All right.
OTE retracement.
Now, Aaron, are you drawing your field from the wick or body? Because everyone does it different. Are you gonna be drawing your field from the wick or the body?
I would draw it from the body.
The body? Okay. We'll start from this body right here. All right, so now only thing we're doing now, we're simply waiting for price to retrace back up inside of our 62 level. Now I'm gonna go ahead and tell you right now, I did use the wick. I did use wick to wick off this. Now I'm gonna tell you the reason why I did it. I did wick to wick here. When you're trading futures, things like copper, NASDAQ, S&P 500, US 30, all those things are very volatile and they will try to hunt your stop. For me personally, whenever I'm trading anything like that, indices, crypto, Bitcoin, I'm always doing wick to wick to give myself the best of the best opportunity. So now we're going to fast forward. So now, only thing that we're doing now, we're waiting. So let's paint a picture. So let's say you got a job, right? You got a 9 to 5 job, nothing wrong with that. Keep your job until you're profitable. Simple as that. Let's say you're at work and you can't watch the charts. So you can't sit right here and watch every single candlestick. Bro, you don't have to. Set a sell limit, set a sell limit, put your stop, put your lot size, contract size, and you walk away and you put your TP. Use alerts. So you'll have an alert when price fills you. You'll have an alert when price stops you. And you also have an alert when price is headed towards your take profit. So there is no excuse. Oh, I got a job. No one cares. Use a sell limit, buy limit. You're filled. So you're at work and you got a notification to your phone that says you got filled. So you're filled. And this right here is what I want to talk about. So if you use body as Aaron said, you would have got stopped. If you would have used the wick as I would have done, you would have still been inside of the trade. Now I want to go back to you, Aaron, real quick. It was one first and foremost, it's nothing wrong with using the body. Nothing wrong with that. I know we talked about this a while ago, during our teaching too. There's nothing wrong with using the body. But just keep in mind, bro, when you're trading anything like copper, NASDAQ, S&P 500, US 30, crypto, Bitcoin, oil, anything like that, just keep in mind that these things are very volatile and they will go almost up for your stop. So to give yourself the best opportunity, always, bro, always use wick to wick when you're trading. Now, if you're trading GU, EU, USDCHF, Euro GBP, NZD, USD, you can use body to body because those things really aren't that volatile. So just keep that in mind. But you did everything right. You're 100% right. OT retracement. So here we go. So your stop would have never got hit. It would have came close, but since this is futures, there is no spread in futures, so you would have still been good. Now I'm gonna be honest. If you was trading Euro USD and price came this close to your stop, I probably would have got stopped out my own self, depending on what broker I was using. But since you're trading futures, there is no spread. So price has to actually come right to your stop to take it out. So here we go. So what's next? Now we're just simply doing what? We're waiting for a 2R. 2R hit at the close of Friday. Now let's go. Let's slow down. Let's slow down and let's go over this trade again. So we're gonna start over and go over this trade. Any questions before I move forward here? Start over. Top-down analysis. Why did we look for a short? That's the question. That's the question you need to be asking yourself going inside of Monday. Whatever pair that you're looking to analyze or go over, ask yourself, why should price do that? So if you want to go long on EU, ask yourself, why should price go long on EU? Is everything supporting that? Are we in a discount? Is price, having a POI? Ask yourself those questions. Now I'm gonna do the same thing. Go ahead.
I have a question. Yes,
Mhm.
like, would you only look to shorts from that inversion fair value gap, or would you look shorts from that fair value gap too?
Which one are you talking
Like in the
about? On
previous
the
week,
weekly? On the 15 minute?
yes, weekly time frame.
Okay. So he's talking about which? So he's talking about this fair value. This. So yeah, we do have two fair value gaps, right? We got a inverse fair value gap, and we also got a simple fair value gap right here. So which one are you talking about?
Like the fair value gap, yes. Like in previous weeks, we are in that fair value gap.
Okay, yeah,
Would you
good.
look
Yes,
to
yes,
short
yes,
from there?
yes. Yes, you're right. So throughout these previous weeks, yes, you want to be looking for shorts also, 100%. So listen like this: when price is in a high time frame POI, you want to your best trades, and this is what I talk about risk management. The trades where you want to go in with a little bit more leverage, it needs to be on side. Now, obviously, while price was retracing back up inside this fair value gap, I'm pretty sure that there was some bullish opportunities here. Yes, I'm not saying that the market is gonna, go straight down. I'm pretty sure that there was some bullish one shot, one kill opportunities here. Matter of fact, I can go show you one. I can go show you one. Which day did we have that bullish one? We had a bullish one shot, one kill on copper. I think it was right here on Wednesday. So that's actually that's a very, very, very great question. 'Cause I have a lot of students that can that they get they get the two confused. Just because price inside of a POI, obviously we want to see price, go short or bearish, but that doesn't mean that price can't go long. The only thing that means for us traders is we want to be putting our bigger leverage, put our bigger leverage on the side that we should be going on. So we're bullish. If price is inside of a bullish POI, our big leverage goes to longs. So right here we had a bullish one shot, one kill off of copper. Now keep in mind, I'm bearish. So I'm bearish and I seen this. So what do you do, Ron? Once again, either I walk away or if I do want to entertain this trade, I go in with the smallest leverage. How hard is that? How hard is that? I don't go in over leveraging. I don't go in trying to pass my combine off this trade. I don't go in trying to pass phase one off this trade. Why? Because it's not a high quality trade. Even though this trade won, it's still not a high quality trade. It's not. This trade won, yes, but it's still not a high quality trade. This still isn't a trade that you would be taking with real money. This still isn't a trade where you're trying to get a payout of because you already did your analysis. You already know that the best trade is when price comes right here, right inside this POI. You already know you should have that conviction. Okay, yeah, I probably showed a long right here, but I'm waiting. I'm gonna wait. I'm gonna be patient and be smart and just wait for price to come on up inside of here. Because I know when price gets inside of here, oh yes, now I can start to, now I can push my leverage up. So instead of risking 1%, I might throw 2.5% off this setup. So that's what we call high quality trade setups, not low quality trade setups. And I'm gonna go with my journal also. So that's a good question, Badal. Good question. So just if you guys didn't understand what he was saying, he's pretty much asking me when price is inside of a POY and we get the opposite, what do we do? Don't trade it, or if you do trade it, go in with the lowest leverage. So right here, once again, guys, copper price has been inside of this bearish fair value gap for a couple weeks, and then price finally came up inside of this last inversion fair value gap, and now we're starting to get some nice reaction off this. So going inside of next week on copper, it's simple for me, guys. I'm telling you right now, it's very simple for me. Price. So what did price do? Price came up, taking out this high. So we had liquidity purge. After liquidity was purged, what do we have now? We had what? Nice displacement right here. Nice displacement. Also, what do we have? Inversion, fair value gap that price has reacted off of very nicely. So going into Monday, what do you think I'm expecting the market to do next week? Go short. My best trades are going to be short on copper next week. If it gives me opportunity, I'm going short. So what does this do for my trading? It keeps me out of dumb trades. It keeps me from reacting. I'm not reacting, guys. I am predicting. I am predicting that price will go lower. That's how real trading it is. Stop listening to these goobers online talking about wait and react. Stop. I'm telling you guys, I've been trading for 6 years the real way. That shit is not going to get you consistent profits. Reacting. Your P&L is going to be all over the place. Make money, lose money. Pass an account, blow the account. That's all that's going to happen because you're reacting to trading instead of predicting. We predict, guys. That's our job as traders is to predict what happens next. It's not to wait and react on nothing. So I am predicting that price will have lower prices. I want to see lower prices on copper if this inversion for value gap holds. Now, let's talk about the opposite. What if price goes up and closes above this inversion for value gap? Then my bias was wrong. I get on side. I would get on side and keep going long until I'm presenting more displacement. How hard is that? So I'm not holding the ego towards my bias. If I'm wrong, I'm just gonna counteract that. That's fine. But I'm already anticipating price to hold this inversion for value gap going to the next week. Simple as that. And once again, this trade was not taken. Like I said, this trade was not taken for some reason. My funded futures, the company that I'm with, it didn't let me place a trade on here. It said that I couldn't take this trade. I'm not sure why. But yeah, it didn't let me take the trade. So Euro GBP was a trade that we took. Copper was a trade that we missed. Um, Let me see here. So we went over top-down analysis. So do I got any questions about top-down analysis, right? This is the best time to ask questions, guys. I do encourage you guys to ask questions. Go ahead. I'm gonna go through the teach us risk management, how to manage wins. I got you. Trevor, what's going on, bro? I have questions about how to juggle multiple accounts, having
Yeah,
difficulty.
yeah. I didn't want to ask if this was just like purely technical
Now
stuff,
go ahead, bro.
but no, I just wanted to see how you're juggling multiple accounts because I have four accounts right now, and it's just hard, like constantly having to adjust the fib. If it like keeps pushing and you have to constantly keep adjusting and swapping between four different accounts. So I just kind of want to see because I know you have multiple accounts. I just want to see how you kind of balance it because it's causing me to getting different fills on different accounts as I'm trying to keep up with the momentum of like the retracement.
So you have different accounts, and you're asking me how do I pretty much keep up with my analysis throughout those accounts. So if you're
Not really the
trading
analysis, just more so like how are you
like execution
constantly, do you have like
wise,
multiple screens open like
okay,
for
got
each
I got you.
account,
Multiple tabs. I got
multiple
multiple
tabs?
tabs open. So for example, I have my CoinEx account open, my XFI account open, and then I have my funded futures account open.
Oh,
So
you can execute on coinex.com?
No, I got the MT4 app on my MacBook.
Oh, okay, okay.
So I have so that's something you want to do too. If you
Yeah, I definitely want to do
yeah,
that.
put the MetaTrader app on your laptop and then you can just filter to it. So that's how I do it. Now, since you're trading four accounts, bro, you want to start doing sell limits and buy limits. You want to start doing
Yeah,
sell limit and buy
100%.
limits on, and just put your sell limit and buy limit maybe maybe like two, three ticks, just a little bit lower than your interest, so you can go so you can actually make sure you get filled. That's how I would do it if you was juggling multiple accounts. But to keep that question simple, whatever account that you really take serious, like that's the one that you're really taking serious. Obviously, you're taking all of them serious, but one or two of them you can actually market execute on. The other two just do buy limit and sell limits. Because it's gonna be hard for you to it'll be hard for you to execute on four different trades on four accounts on one trade. You can because one of those trades will get a bad feel because you got to execute with
Exactly.
stop loss. So yeah, just do two accounts, do buy limit, sell limits, and the other two accounts you should be able to answer those at the same time.
Okay, cool. Yeah, because that's what happened to me this week. Trying to
Gotcha.
juggle trying to swap between all four different accounts. I'm
I'm
getting
a,
different
I,
fills for
I'm gonna
each
call
one.
you. I'm gonna call you after this call too if you're free. We can
All right,
talk about a little bit more too. All right.
all right.
So now I'm gonna go through the questions here. Do you look okay? So I'm gonna scroll all the way up. Do you look at the daily or the 4 hour POI also? I'm hoping I'm saying your name right, Jerome. Jerome, that's a good question, brother. I use the daily, Jerome. My best POIs comes from the daily time frame chart. But Jerome, the 4 hour is good, bro. If you can do the same thing I just talked about here on the 4 hour time frame, the 4 hour is great. The 4 hour, February gals, those are great too. As long as you have, as long as you have the right, correct draw liquidity, Jerome. 4 hour is good, bro, and 1 hour is good. So it's literally the exact same thing that I just showed you in the weekly time frame chart. You apply the exact same thing to the 4 hour chart. Wayne asks possible breaker and prop possible breaker and prop entries on 15 minute before OT retracement. You ever consider? Good question, Wayne. I don't. I only enter the OTE, bro, and this is to keep my trading simple. Now, I understand exactly what you're saying. There definitely were some, they definitely were some more entries to enter above my OTE. But me personally, bro, I've been trading the same model for about 4 years. So I'm very, very, very confident and waiting for the OTE. The OTE fits my personality. So I'm very confident and waiting for the market to come all the way down to the OTE. Now let's say, Wayne, let's say if the market came down and it stopped at a fair value gap above my OTE. I'm fine with missing that trade, bro, because I know over the long run, over 30 trades, I know for sure that the market will come down to the OTE. But Wayne, if you're not as confident using the OTE, if you don't have that much experience using OTE, or if you see something else other than the OTE, you can take that trade. Just understand that you need to make sure that you manage it the right way. So that's a good question, bro. Bond Bone. Teach us risk management, how to manage wins and losses. And I will end the call off with that. So give me a minute. Samsung, higher time frame, one shot, one kill. If you feel the displacement leg, also image shift and buy side taking. He said higher time frame, one shot, one kill. If you feel the displacement, 100%. 100 good, Samsung, because a lot of people don't understand that, bro. The one shot, one kill works on higher time frame too. So he's 1% right. If you look right here, so what do we have? We had liquidity run, displacement, OTE, retracement. So where is price coming to? So Samsung, good job, bro. Price is inside of a what? A weekly OTE. Good job, Samsung. Good job. Good job on identifying that. Because a lot of my students don't understand that everything that we do in the 15-minute time frame, it correlates to the higher time frame. He said use trade copier. I don't think yeah, that's a good thing too. Trevor, I was gonna say you probably can use trade copier too, bro. Yeah, I haven't used a trade copier in a minute, but trade copier is pretty good. All right. Any more questions, guys? This is the best time to ask. Please come off mute to ask me some questions. Anything, any analysis before we're gonna go into risk management. You go with training NFP week. Good. So let's go over that, guys. Let's go over NFP week. That's a good topic to go over. So obviously, guys, we just had NFP week last week, and I'm telling you right now, guys, this is a gem. So you guys taking notes or whatever, please, if you don't take anything away from this call, please listen to what I'm about to say. on NFP weeks and CPI weeks. Listen closely, guys. I'm telling you, I have experience in this field right here specifically. NFP week, Monday, Tuesday, and Wednesdays are the best days to trade. So I'm gonna go slow on this topic. On NFP week, Monday, Tuesday, and Wednesday are the best days to go with the trend. On NFP week, we follow the trend all the way up into Friday. So if the market is going bullish on Monday, Tuesday, Wednesday, and Thursday, we follow that. We don't look for reversals, guys, until Friday. Once again, I'm gonna say it slowly. We don't look for reversals until Friday. Monday, Tuesday, and Wednesday are the best days to trade NFP. Thursday is a manipulation day. Now, Thursday, granted, Thursday was good this time, but I'm telling you right now, from past experience, Thursdays are not good on NFP week. Great question, Badal. Please do analysis on the Euro CHF trade we took yesterday. Okay. Jerome, that's fine, bro. DM me on Instagram. I got you. I'll respond back to you today. Okay, guys, we're going to be doing Euro CHF analysis here. We're going to do the same thing. We're going to start from the monthly time frame chart. I'm going to start monthly, weekly, daily, 4 hours. So here we go. This is the monthly time frame on Euro CHF. So now I'm gonna be real. I'm going to tell you right now. It's nothing point to going short on the Euro CHF right now. It's nothing point going short. This market is in a discount. This market is in a this is a discount market, guys. This is a discount. This is a market that is priming to go higher soon. Why? Because we're only offering sell side. We're not taking out any old highs. The only thing that's been taken is sell side. So with that being said, we're going to be waiting for price to give us opportunity to go long. Now we went short. So before I move down, I went short off the trade. This was more of a B plus trade. I will be honest. This was more of a B plus trade. This was not a high quality trade at all. More B plus. More B plus. All right. So with that being said, the first thing that we see right here, the first thing that popped out to me is that price came where? Right here. Do we got any questions about this fair value gap? Price came right inside this fair value gap. Nice reaction to the downside. So what do we have? We have price coming inside of this bearish fair value gap. Look at the bodies. Price came inside of the constant 50%. Nice. Moved away. So off this trade, this was a B plus trade. This was not an A plus trade. So I'm saying this right now. This was not a plus trade. This was a trade I went in with small leverage. On my personal account, I usually risk about 50%. I risk 25% off this trade. On my prop firm account, I usually risk about 3% per trade. I only risk 1% off this trade. So this trade was not a good, this was not a good sale. But I came to my charts on Friday because I didn't even watch Euro CHF this week. I only watched it one day. I came to my charts. I said, okay, price is out of a bearish for value gap. It's Friday, NFP. The market opened up on NFP. It didn't really give a lot of reaction. So I said, I'm just going to go ahead and go short. So let's go ahead and go down to the daily time frame chart. Daily chart. Now look right here, guys. We're going to zoom out in daily chart. Let's zoom out. So going into next week, obviously, as you can see, we have nothing. The only thing this market is doing is it's accumulating right here. This isn't good price action. I'm saying it again. This is not good price action. This is why I lowered my leverage on this trade. So notice something, guys. Notice how I'm comfortable with lowering my leverage and upping my leverage. Notice how I know when to go all in and when to, play it safe. No, do you notice that? I'm not just fucking swinging for the fences on every single trade and gambling. There's times to do that, and there are times when not to. Off this trade, you had no fucking business trying to gamble. Yeah, no business trying to get rich off this trade. This is a horrible trade, but I still took it. So with that being said, let's go to 15-minute time frame chart. So as you can see, I just did my top down. So just slow down. Ron just did his top down analysis. He couldn't find nothing to support his bearish idea, but he still took that trade. What do we call that? That's a B plus trade. Off the real B plus. Just go ahead and pull up our tool here. Session 2. Now, someone come off mute. I want someone to walk me through this entire trade. I'm gonna start it here. Anyone come off mute, walk me through this trade. Someone let me know. Someone let me know what's the first thing that I need to see to go short of USHF. Anybody? Anybody? Anybody?
Asian iPods, brother.
All right, Agent High Purge. What's next?
London displacement.
Tell me when you see London displacement. 1 second. Stop me when you see clear London displacement.
It's down, brother. It's down. London displacement plus magnitude.
Show mark out the MS shift.
Pricing premium.
Price is in the 15-minute premium. Whoever just said that, good job. Good. Now delete it for me. What's the next rule?
Price in optimal range.
Are you doing a wick? Are you doing wick or body?
I'm using body, brother. It's clear displacement.
Your field. 1 second. We're gonna send this out. So your field. Now your field again. Two-hour hit. And whoever said that about premium, good job. Because price was in a 15-minute premium. That's the only reason I took the trade, guys. I was actually waiting for someone to say that. Price was in a 15-minute short-term premium. Euros HF, very, very, very beautiful trade. Any questions, guys? Any questions out the trade? Any questions? Remember, I just showed you guys my top down analysis. The weekly chart wasn't good. Daily chart wasn't good. Monthly chart wasn't good. The only thing that supported this idea for me to press that button was that we were in a 15-minute short-term premium. So any questions? And once again, whoever said premium, good job. Like, good job by saying that. But this is a great trade. Whoever took this trade with me this week, I forgot who took it in the chat with me, but I forgot the guy's name in the chat that took it with me. Um, Good job on the trade. All right, guys. Any questions before we go on to the last topic? Let me see. All right, we got some questions in here. Okay. Bro, also talk about how to become cautious of these prop firms because some of these, yep, they can make you, yep, we'll talk about that. Okay, what was the difference in EU, GU on Thursday? Because I heard you say you didn't like GU curries and what was their thought process? Okay, good question, Chris. Okay, everyone knows that I've been bullish on EU for a minute, right? Everyone knows that I've been bullish on EU and bearish on the DXY. So I came inside of this week with EU. I want to go long on EU. I want to take longs on EU and I want to take shorts on the DXY. So with that being said, we're gonna go over this. So watch right here, guys. Watch right here. Watch right here. I'm gonna start. I'm gonna start on the higher time frame chart. So I'm starting on higher time frame chart. Now I'm gonna be honest on the EU. It's simple on EU. The reason that I'm long on EU is I want to just simply see the simple guys. I want to see this old high taken right here. Once this old high is taken, I'm not going to continue to keep chasing long because obviously we had a nice strong displacement. And I understand that even though this market probably continues to keep going bullish long term, we will see a retracement back down inside of a discount market. So once the market takes out this old high, I want to see turtle soup on the higher time frame. So until then, I'm going to go long to take that out. So that's my narrative. My narrative is that I want to go long on EU until we take out the old high. Daily chart. Off the daily chart, as you can see, got our old high, that same old high. Now let's go ahead and do our daily analysis. Our daily analysis here, what do we have? Price came down where? Look right here. Very nice reaction right here. Off this order block, last down close candle here. Before our displacement to the upside, price came back down, hit it right here on Thursday. Very nice. So with that being said, I'm going to be simply expecting price to continue to keep going long until price takes out this old high. When price takes out this old high, yes, I'm going to go short on the EU for a minute. All right. So that being said, we're going to go ahead and go here. So now that I know, before I even go to the 15-minute time frame, I already know what direction I want to go in. So let's go to it. 15-minute time frame. Let's see if my model presents itself. All right. So let's go over real quick. So this trade was taken on Wednesday. Okay. Went too fast, but we can just go over it. All right. So right here, what do we have? We had what? Asian high. I mean, I'm sorry, Asian low purge. We had Asian low purge and we had previous day low purge. So we had Asian low swept and a previous day low swept. What's next? London displacement. Do we see London displacement? Yes. Very easy. Nothing to think about. Simple, easy peasy. Drawing out fear from the body. What time do we get filled? We get filled at what time? 6:30. Price runs up for a 4R. So that's EU. That's EU, right? So now we're going to go to GU. Same day, same pair. Watch this. Here goes GU. Obviously, you guys seen I was in this trade in my Telegram chat. Once again, go check it. What happened on GU? Price ran Asian low, London displacement, OT retracement, 4R delivered. Relative equal highs resting right here. So the only reason, so to answer your question, Chris, GU is a very, very, very volatile pair. GU is similar to NASDAQ in the indices world. So whenever I'm trading GU, I'm always cautious of price action. I'm always watching what price is doing. Now on EU, I can place my trade on EU and walk away. On GU, I don't feel that same confidence because I've been in trades on GU where it takes my stop then goes, but EU, doesn't. So that's the only reason, bro. I mean, my experience with GU isn't the best, but GU is a very great pair. It's just GU is a very, very, very high volatile pair. It's very manipulative. It will go down for stops, while EU doesn't. That's the only reason why I say that. Good question. All right. And cross pairs and NFP. Okay, Badal said on cross pairs and NFP week, Monday through Friday, go with trend or play reverse one shot one kill. Okay, good question. So Badal, with cross pairs on NFP week, you can find reversals, bro, Monday through Friday. That rule what I said about going with the trend, that only applies to the USD pairs. With cross pairs, you can find some reversals, baby, on Monday, Tuesday, or Wednesday, and not have to wait hours at the end of the week. So just keep it, if you write your notes down on NFP week, follow the trend for the USD until Friday. On with cross pairs like NZD Euro CAD, GBP CAD, Euro GBP, NZJP, on those pairs like that, you can find reversals before Friday. Good question. Premium, yes. Is Confluence with OTE? Wayne said, is Confluence with OTE and fair value gap per month? Good question, Wayne. No. What you need to see, Wayne, you need to see an OTE. Wayne, you're not always going to see it for value gap. Like right here, off the trade, right here, look right here on GU. There wasn't a fair value gap right here. We had an order block, last two down close candles here before our impulse, order block. So Wayne, you don't have to see a OTE and fair value gap. You may see OTE and a breaker. You may see OTE and a inversion fair value gap. You may see OTE and an order block. You may see OTE and supply and demand with whatever. But what you need to see is OTE. That if you're trading the way that I trade and the way that I teach my students, OTE is a must. That's non-negotiable. You need to pull the OTE fib out and make sure you're entering around the OTE fib. Good question, bro. Jerome said, can you do a top-down analysis? Yes, I will do top-down analysis on EU. Would you play EU short next week, even if the weekly high hasn't been purged? Okay, so that's what we're going to end the call off right here. All right, so these last two questions, guys, I'm gonna answer that, and then we're gonna go risk management. Then that'll be in the call because we're already going into an hour off this call, and I don't want to hold you guys up. So we're gonna start with Jerome question first. He said, can you do a top-down analysis on EU and GU? So let's do a top-down analysis on EU and GU. And this is going to be live analysis going to next week. Let's see what can happen. So first and foremost, the first thing that I do News. You need to know what's happening on that economic calendar release. I already tell you right now, we got CPI next week. We got CPI next week. So my bias, it's not going to be as strong until after CPI. So I'm gonna slow it down. My bias isn't going to be as strong until after I see what CPI does. So with that being said, Monday, no trading day. We have no news, and we have bank holiday. Tuesday, no trading day. Wednesday, if you want to, trade CPI and do that, that's fine. Thursday and Friday will be the best 2 days next week. Thursday and Friday. So with that being said, I'm now coming into my charts. I'm gonna start with EU, honestly, because I'm not really a fan. Like I said, I'm not really a fan of GU. Well, I'm gonna start with EU. So Euro USD, this is what I'm seeing on Euro USD. On Euro USD, this is what I'm seeing going inside of next week. First and foremost, on Euro USD, we've seen that price came down inside of a bullish fair value gap. Price has reacted off a bullish fair value gap, and we have a nice stretch to the upside. While price took out our bullish fair value gap, what did we do? So our price came down inside this bullish fair value gap. What did we do? We took out sell stops. So we took out stops while coming inside our POI. After price took out stops and came inside of our POI, we had a nice displacement to the upside. So yes, this market is bullish. Yes, it's bullish. But we need to wait. I want to wait for a better long position. If I buy right here, guys, think about it. If I take a long position right here, if I go long right here, I'm buying at the top. I'm not trying to buy at the top. I want to wait until I see price retrace back down inside of a discount. First thing that I see that pops out to me right here. Inversion fair value gap. We got a bullish inversion fair value gap. So if we can maybe see price retrace, hit that, and then we really explode. Where are we going to explode to? Right here. Candyland right here. See right here? These old highs. Traders that took sales right here, they're profitable and they're floating profit. I want to see if the market can simply retrace back down and explode and go get them. So with that being said, going into next week, I would love to see a price and go ahead and take out this old high right here. After this old high is taken, I want to see a short-term reversal to the downside. So my bias, so I'm saying this right here live. My bias for EU is I am long-term bullish and I'm short-term bearish. If price wants to reach above this old monthly high, which we made on April, I will be looking for smart money reversal to go short on Thursday and Friday. But keep in mind, guys, since we're trading CPI, I want to see CPI do its thing. I want to let CPI show me what it's really trying to do. So I'm not really coming into next week on EU and GU with a definite, okay, I'm going long, okay, I'm going short because price is near this old high. Once this old high is taken out, I want to go short. But I want to wait for CPI to open up because CPI can open up on Wednesday and just say, fuck this high. I'm going straight down. I'm going straight up. So I want to wait until I say, oh, I'm bullish or bearish. I'm waiting until Wednesday. But I'm not going down to the weekly time frame chart. I'm not going down to the daily chart. I'm only using the monthly chart right now. Reason being, I want to wait for the CPI to open up. Once CPI open up and it closes, that's when I start going down on weekly time frame and daily time frame chart, depending on what price does CPI. So this is my analysis right here for EU. Once again, I am long-term bullish. Long term, I'm bullish. Short term, I am preparing to be bearish until price gets back down inside of a discount. That's all it is. So when price starts to move down, I'm not gonna say, oh, it's going bearish. No, price is coming back down inside of a discount so we can go long. So good question, Jerome. Hopefully that made sense to you. But I'm not going down into my other time frame charts until CPI, bro. Now, if I was just doing analysis on another pair, then yeah, I'll drop down monthly, weekly, daily. But since I need to see CPI open up, I'm not even going to go down to the other time frame chart with the month time frame. All right, last question here before we do risk management. Badal said, would you play EU short? Well, it's kind of the same question that Jerome asked. Yes, if EU shows short opportunities, I would take that because price is nearing a short-term premium market and we are above this old high. So if shorts do show, I will, entertain shorts off EU. But I wouldn't really I really look to go long until price, shows the willing to get back some of a discount. I don't really trade US 30, Muhammad. I don't trade. I know you do, but I don't trade. I don't really like to trade US 30. And I also don't like to make analysis about the indices because the indices they're influenced by a lot of other stuff in the world. Like Forex is easy to predict. I'm gonna be honest, I don't specialize in Nasdaq. I don't specialize in US 30. So you may see me trade them every now and then, but that's not I don't specialize in those markets. So I try not to say, hey, US 30 is gonna go short, bro, or hey, it's gonna go. I don't try to do that on those pairs. I just trade them intraday, 15-minute time frame, premium discount, and go from there. All right, so we're gonna stop right here, guys. We're gonna do risk management, and then that'll be it. While I'm doing risk management, if you guys got any questions, ask. But risk management is what we're gonna finish off at. Real quick, risk management. I'm gonna give you guys my risk management system that I use. I'm just gonna put risk man. Yeah, we're gonna put risk man. First thing first, guys. Let's say you got 100. We're gonna use a 100K account. 100K account, for example, right? You got a 100K account. Off that 100K account, let's say you bought a 100K account. We're gonna be using FTMO. 100K account plus FTMO. Phase one, we need to make what? 10%. So with that being said, the only thing that we're gonna do, guys, we're gonna be risking 1%. We're gonna risk 1% until we have a 3% buffer. Make sure you guys taking notes now, because this is exactly how I pass my prop firms. That's how I teach my students. My student Peter, he uses the exact same. And go check him out. He's on fire right now, making real money, real payouts, not demo, not trading on some paper. He's trading with real money, making real money, using the exact same risk management system I just showed you. He's no different from no one in here. Risk, he risking 1% until we have a 3% buffer. So that means on A plus trades, he risking 1% until he have a 3% buffer. So until Peter has a $3,000 buffer in his 100K account, he can never risk more than 1%. Now, when 3% buffer is acquired, you can now risk 2%. You can now risk 2%. So let's slow down. We just bought a 100K FTMO account, phase one. First trade, we're going to risk 1%. We're not going to risk more than 1% until we have a 3% buffer. All of our trades go for a 2R or 3R, depending on how you want to do it. You want to go for a 3R, you can get your buffer in one day. If you want to, be smart, you go for 2R. But let's say that you have a 3% buffer now. Risk 2%. So off that 3% buffer, you're going to risk 2%. Let's say if you lose. Now let's talk about the downside. Let's say if you lose that trade. So you got a 3% buffer and you risk 2% and you lose. You still have 1% left in the account. So instead of being 3% in drawdown, you still have 1% to play around with. So what you're gonna do, you're gonna go back to the same parameters. So now you have to build that 3% buffer up again. 3% buffer again. You got to build that back up. Now, with FTMO, you got to make 10%. I'm a very aggressive trader, guys. The way that I teach, I'm very aggressive. When I'm doing A plus trades or phase one, phase two, I'm taking number A plus trades. I'm taking A plus trades and I'm putting, a lot of risk on those trades when I get my 3% buffer. So me personally, the way that I do it is once I get a 3% buffer, I'm risking that whole 3% on the next trade. So at that point, I can potentially pass phase one in about 1 or 2 trades. No, I'm sorry, two to three trades, phase one. Assuming if those trades go right. Phase two, it's the exact same thing, guys. Phase two, the exact same thing. So when I pass phase one, I get that. When I pass phase one and get the phase two account, I'm going to start out by risking 1%. So I only got to make 5%. I'm gonna risk 1%, and I would never risk more than 1% until I have a 3% buffer. When I get my 3% buffer on my phase two account, you ain't even got to risk the whole 3%. You could just risk 2% and that trade wins and you just made 5%. So, and as I always say at the end of call up, guys, risk management is always going to be different for everyone. My risk appetite may be different from yours. You may not be comfortable risking 3% of the whole trade. If you're not comfortable doing that, that's fine. Because I have experience. I've been trading for a long time, so I have experience with risking 3%, 4%. On my personal account, my real money, I'm risking about 75%, 75 to 50% of my account every single trade on A plus. So I'm comfortable with taking that loss, and I'm comfortable taking that win. So though that's my risk management, bro. Like it's not glamorous. It's not some. It's simple. Build a 3% buffer. Once you get a 3% buffer, you go all in off that 3% buffer. If you lose that 3% buffer, you build it back up and you keep doing that. Now let's talk about this real quick. What happens if you lose that first trade? So Ron, I just bought that 100K account, bro, and I lost my first trade. I'm in 1% drawdown. You reduce your risk to 0.5% to get break even. I don't care if you're down $2 in drawdown. You follow the rules. You risk you risk 0.5% until you have a buffer. I'm sorry, you risk 0.5% until you're back at break even. So simple as that. When you go in drawdown, 0.5%. Never risk 1% while in drawdown. That's stupid. Don't do that. 0.5% until you're back at break even. All righty. Let's wrap it up here. Ron, can you show us which pairs you're focusing on? Can you show which pairs you're focusing on, Sean? Can you show us which pairs you are focusing on trades and FX? Um, it's the same thing, Yasmin. EU, GU, DXY, USHF, UJ, any Forex pair, I'll trade it. And you know that. I've taught you already. You know, I'll trade any pair. Now, with copper, I'm now trading futures. I have a MyFunny futures account, so I'm trading with futures too. So I've been dibbling dabbling to copper, oil, silver, but even with those pairs, I don't have the best experience in those pairs. I'm still learning in those pairs. But price action is price action. It's the same thing. Same thing that happened in Forex. Same thing happening in the futures market. Yeah, bro, you're late, but like I said, this call is recorded. It will be on my YouTube channel later, and I will post it in the Zoom chat. Now this call is about to end, guys. We've been going over for an hour and 30. I thank everyone for joining this call. If you guys got any questions for me, if you guys are interested in learning from me, I do private mentorship. I don't teach everyone, so I want to say that right here, guys. I don't teach everyone, so I may not pick you, and it's no hard feelings. But if you don't have experience or if you're a newbie, I can't help you. I'm sorry, I can't. I only focus on experienced traders. I only focus on traders that have been trading for at least 2, 3 years. That's my target audience. So once again, guys, I will be available all day. You guys can text me on Instagram, Telegram, YouTube, and go from there. But it's called by the end. Thank you guys for joining. I'm gonna catch you guys in the next one. Peace.